Asian and European markets are down across the board due to mounting signs that the global economy is heading for or already is in a recession. The latest red flag comes out of China, where exports grew just over 7% in August. That's below most projections and far slower than July's figure of 18%. Imports were flat year on year in a sign of the deteriorating purchasing power of the Chinese consumer. Grim economic numbers from China have broad implications. We're seeing this in energy markets too, because China is the world's leading importer of crude. The price of oil fell for the third straight session, now trading at its lowest in 7 months. Now, for more on the story, let's go to Danni Hewson, financial analyst at AJ Bell in the UK. Welcome back to the program, Danny. Now, to be fair to China, these trade numbers don't look great because we're comparing them to last year's, which were very good. That was a part of the post-pandemic recovery. But that's not all, is it? Why is China struggling so much?
It's not all, no, absolutely not. China is struggling for a number of reasons. First, of course, it is still battling COVID. It still has a number of lockdowns. Its zero COVID policy means that in some cases, factories have had to be closed. They've also had heat waves, which have made things very difficult for manufacturing to go ahead in some places. And you've also got, in addition, consumer confidence, which is really rock bottom. So in terms of Chinese purchasing power, people just aren't prepared to spend in the way that they used to do. So, yeah, when you compare it with the same period last year, it looks incredibly bad. But still, the fact that these numbers didn't even reach what had been expected just demonstrates the weakness in China's economy.
So you mentioned Chinese factories, some of them being idled or running at below capacity. Now we know China often described as the world's factory, and they are the largest trading partner for many major economies. So how do lockdowns in China affect the rest of the global economy?
Well, of course, it means that less stuff is being produced, so there's less stuff for us to buy. Now, the situation with inflation the way it is, they always say that the best cure for high prices is high prices themselves, and that's certainly something that we're already seeing. So the price of shipping has come down because global demand for goods has been shrinking. The big issue, of course, is that if global demand starts to pick up, if prices start to fall, and if the stuff isn't there, if it's not being made by China's factories, then that could in turn force prices back up again. So it's a very precarious position that we're in at the moment, and that's why economists are keeping a really close eye on exactly how China is doing.
All right, Danni Hewson, financial analyst at AJ Bell. Thank you for joining the program.